What's up, YouTube? It's Todd Horst here with Tasty Tracker. Today I wanted to talk about how much do I need to get started? How much can I make when I get started? These are sort of the two basic questions that every beginner asks, and they sort of drove me nuts when I first got started because you ask around, whether it's different gurus that you're following or other people in the communities you're involved in. Which, first of all, if you're not involved in a community, you should be. If you want to, you can join mine. I have a website, Discord, Twitter, all of those things. But you should really be a part of some community, whether that's mine or not. It doesn't matter to me. But having other people um, help inform you about different events that are happening, different tickers that are looking hot, different styles of trading. You don't have to follow, and you shouldn't follow everything that they say, and definitely do your own research, but take that information in and soak it up like a sponge, do the best you can. And for these types of questions, it's best to ask around. But when I was asking around, nobody really gave me a direct answer, and it sort of drove me nuts. It's like, well, how much do I need to get started in order to make the amount of money I want to make? So yeah, beginners want to know how soon till I'm going to be rich. What's the most profitable strategy? So I can just jump right to that. Um, Maybe there's inconsistencies in the marketplace, and I can just um, do some real quick, easy strategy: buy here, sell there, and bada bing, bada boom, I'm a millionaire. Yeah, the real quick answer on that one is if it was that easy, then everybody would be rich instantly. It's not that easy. Any of those quick, easy things to do definitely don't work, or if they do, you need to be a high frequency trader, a computer right beside the stock exchange or something like that. So anyway, you can get that out of your head a while. Anyway, how much money can I make from X amount? What's the target I should shoot for weekly growth? And so I'm going to try my best to answer these questions from my experience and what I've seen, and hopefully it's a little bit more satisfactory than what I got. But the first bullet point I have here is no one gives you direct answers or good answers because it's impossible for them to give you answers. Every person trades completely different, and even if you follow my trades, which I publish, you're going to enter in at different prices. You're going to exit out because you don't have the same confidence in my positions that I have. You can only have confidence in your own positions. And so, wow, it's good to follow individuals to help get a feel for different styles, what's possible. And some styles are easier to follow. Mine's an easier one to follow than a lot of people. I don't day trade, so you can enter in at the same prices I can typically. But the whole point is you might not allocate the same position size to one position that I have. You might allocate less, and then to a different one, you might allocate more. And incidentally, the one that I lose is the one that you allocated more to, and the one that I win is the one that I allocated more to. So there's all of these stupid small variables that change even people that are trying to play the same positions. So with that said, moving on here, the riskier you are, the more generally speaking, you have the potential to make. But you also have a greater potential to blow up your account. And so which one do you value? I personally value stability. I do this as a side hustle. This is not my only job. So my goal is to grow an account. Yes, I want to do it as quickly as possible, but I also want to do this as long term as I can and make as much money as I can over a long time horizon. I don't need to be a millionaire by the end of 1 year. I have a steady job, and so that's good enough to pay my bills. Anything I'm doing here is all just gravy on top of that. So if you're looking to quit your job and do this full time, but you're a beginner, you need to reset your expectations. You can't expect to be the CEO of your own company with no prior experience. You need to work up to that, and it's the same thing with trading here. You get some experience on your belt, do it for a couple years, and if you're successful, you find a style that works for you and is consistent. Then you can think about that kind of stuff, but you're getting ahead of yourself. Okay, so the amount of risk that you're willing to take. Your risk tolerance is the joke with Robinhood for a lot of the people that are blowing up their account and their bug that they had in their system. But anyway, so let's move on to the next bullet point. How much time do you have to stare at the market? So day traders risk more per position, but they're in shorter term trades. Swing traders, and I say swinging could be anywhere from 1 day, 2 days to 2 weeks to 2 months. So that is the whole gamut there. But doing so might increase your win rate, but then you're going to make potentially less money because it takes longer time period for that position to pan out. The more time, though, you're looking at charts and researching, doing the trading, the more input that you have can tend to lead to increased potential return if you know what you're doing. Obviously, there's such a thing as over trading where people are forcing trades that aren't the best setups. That's a bad thing. But if you know what you're doing and you're on the hunt for good setups and then you take those good setups, obviously if you're hunting 10 hours and you find 10 opportunities and I only hunt for 1 hour and find one opportunity, you're going to make more than I do if we have comparable skill levels. So the whole point is you get in, you get out what you put in, basically, is what I'm trying to say there. So the last bullet point on this slide is how much discipline do you have? So discipline is like the cornerstone of trading. If you aren't disciplined, you can't control your emotions, then you are going to take positions too early, too late. You're going to exit too early, too late. You're going to enter positions that you shouldn't, et cetera, et cetera, et cetera. Can you keep a strategy that is successful and be consistent in implementing that strategy? Can you continually refine your strategy? If you are not disciplined, and I'm disciplined, I can't tell you what you're going to make per week, per month, because we have different different methods for how we're going to achieve that. And I'm very strict with what I do, what I like, even though it's a fairly basic system. I stick to that system, and maybe you're more lenient, and so then we're going to have differences that way. Okay. So the previous slide was sort of a context half answer on some of the things you need to consider. Here's my specific answers on what I think you need for starting capital. And with all things, these things change, month by month by month. What I think this month, I might not think next month. So if you're still curious, you can leave a comment or ping me on one of the social medias to see where I'm currently at. But at this point, and sort of what I've come to conclude is for stocks, it's really great to start trading with 500. If you have less than that, and again, these are beginner numbers, sort of talking about the average person that's getting started. If you're a boomer or something and you have 100,000 sitting there in cash, burning a hole in your pocket, congratulations, but that is not the most of us. So, the standard person walking around in the streets, if you start off swing trading stocks, you can do 500. That will allow you to enter in several positions, which will help spread out your risk. You're not going to be able to get insanely expensive stocks if you're trying to buy whole shares, but Robinhood recently and other brokers, but with the realization that most of you are starting off on Robinhood, which is a good place to start. It is free. Anyway, they just offered fractional shares. So with fractional shares, you can put in the dollar amount. So I want to invest $20 into Amazon. Well, Amazon stock is way, way over $20, so you would never be able to afford a share of Amazon. But with fractional shares, you can buy $20 worth of stock in Amazon. So that's great. And so with 500, like I said, you can spread out your risk. You can start investing in quality companies, start trading on Robinhood. I don't know if you can still do a cash account. You used to be able to, but you would need a cash account in order to day trade more than 3 times a week, or you can just limit it to the 3 trades, or try not to do any day trades. which is easy if you're trying to take a position and hold it for a week or two, trying to get a jump up, a leg up in the stock. The next bullet point here is for day trading stocks. I say $100 is good. Obviously, here again, you're only going to be getting smaller value or fractional shares. But if you're trying to day trade, you have to realize that it's both an art and a science. And so you need to have all of the skills that you would have for swing trading, but then you need a good sense of really hone in on your timing and your accuracy as far as time horizon. With swing trading, I can enter in a position and not have the best timing, and there's enough flexibility there that I can exit profitably. With day trading, you need to be precise on your entrance and your exit, and at least in my opinion. So the $100 is a good place to start to sort of start to hone those skills with the realization that you're going to blow that account up, and then you'll start with another 100, and then you'll blow that up. And if you do that enough times, maybe you'll realize that that's not the style you like, or you get good enough at doing what you're doing. I'm not sure where I say whether it's in the next slide or not, but I only day trade with money that I know or that I'm okay with losing. And you need to have that mindset when you're day trading, because if news comes out, the market takes a turn on a dime, then your position will go against you. Now with stocks, obviously, it's not quite so severe as with options. You'll still be able to exit out with and get a bunch of your capital out. Unless you're playing penny stocks or something like that. But I wouldn't recommend that anyway. Let's just move on. The next one is for day trading options. I have $1,000. Sort of the same premise there. You're probably going to blow up that account, so you don't want to start off with a huge amount. But you can still get multiple contracts in something like AMD to day trade, or Walmart is a common one that I would play with a small amount. Then the last bullet point is with more my style. I typically swing options, and 5,000 is a good amount, especially if you're selling premium, which is how I play options, to sell credit spreads. And so I want 5,000 ideally to have enough positions open that I don't have all of my capital associated with one position, and I can spread that, diversify. Obviously, you can do it with less. I'm running a 2K challenge right now, so you can definitely do it with less. It's just that it takes more time, and you're more likely to blow up that account because you're not as diverse. Okay, so that covered the capital half, and now what ROI can I expect? And this one is where it can just go all over the map. So risk to me is the biggest factor here, because if you allocate your whole account to one position and that position wins, then you could make a lot of money, but obviously you could go the reverse where you totally blow up your account. So if you're willing to risk your entire account, which I would wholeheartedly not recommend, but you can get a huge ROI. But for me, what I was shooting for and actually achieving with short swing trades in stocks, I did that first. I was hitting between 1 to 5% a week. There would definitely be weeks where I wouldn't make any or I would lose some, but on average, I could hit 1 to 5. 5 was definitely the top end of that. And so 1 to 3% maybe is something more like you could expect. It's also important to think about how much of your total account is allocated, because even if you make 5% on one position, but you've got 10 positions on, and all of the other ones are currently losing, that 5% gain on that one position isn't going to offset and have your total account see a growth of 5%. So sometimes maybe you're shooting for an entire growth of your account of 1%, or maybe you should shoot for the average percentage win on a specific position. So for example, with the options positions that I take, I'm typically looking for a 50-ish 50 kind of split where I'm risking 50 to make 50. Um, Sometimes it's less than that, certainly a lot of the time. Um, and then I close it at 50% of that. So I'm looking to make 25% essentially and risking 75%. So that's what my personal percentage are for risk reward. Um, but I'm looking at it at a specific position level, not at the account level. If you're looking at the account level, then you need to have all of your account allocated in order to see those kinds of gains. That's one place where options help because you don't need to have as much of your account allocated because it's leveraged. But it is still difficult to make a huge impact on your account if most of the amount of money is sitting on the sidelines. But there's so many factors here. I definitely have a video already on spare cash. You can check that out. But the moral of the story is you need to have that money on the sidelines so that you can take advantage of opportunities when they come up. Okay, so third bullet point here with day trading, these percentages are all over the place because you can have a string of bad days where you think the market is just about to turn around and it doesn't because it's not on the same timeline that you are. And so you're going to have a terrible week where you gave up an entire month's of gains that you had all in those 5 days. So meanwhile, 2 weeks later, you'll have a smashing week and you'll make up. So you'll see these huge inconsistencies in your account. Obviously, the trouble with that is on one of those dips, are you going to blow up? Or on one of those dips, are you going to give up on your methodology? Those inconsistent strategies are more likely to do that to traders. And so that's why I would rather take a strategy that makes less but is consistent over a strategy that has the potential to make more, but also is so inconsistent that I lose hope at times, right? Okay, so last bullet point here is swing trading options. Again, this is what I typically do. The past 2 months, I've been making about 50% on my account increase month over month, but that's completely not sustainable. I'm not going to claim that that is. I have good months and bad months. What really dictates this is the position of the tilt of your portfolio as a whole and the direction of the market and how much you have allocated, as I already talked about. So I've been bullish basically for the past 2 months, and of course the market has been on a tear. It's been some of the best trading bullish market in the past 2 months, despite what people think it should be. So because of that, I've been able to enter in positions that I'm expecting to be in for maybe 20 days, and they close in half that time in 10 days. So it really is all about so many variables that are proprietary to you, and that's why nobody gives you a clear answer. The best thing you can do is trade for a while and start seeing what your average is and then seeing how you can increase that or increase the things that you value. Maybe it turns out that you don't actually care about the percentage increase, you care more about the consistency and seeing the growth. And that leads you to a more conservative style, or you can see areas that you can improve in your trading. And that's the whole point of my website. If you're not familiar, Taster Tracker is just a way to track your stocks and options and be able to see what our community, what positions they're opening up, so you can learn. It's all free. We do have a paid tier, but that's certainly not required. So I think, to me, the two biggest areas to improve your trading are by having a community and then tracking what you're doing. Obviously, I'm biased. But by really analyzing what you're doing and what others are doing can help you exponentially increase your skill set. And at the end of the day, I think that's what we're all trying to do. So here's my disclaimer. If you have any questions, let them in the comment section below or hit me up on my website or any of the socials, and I'll talk to you next time. Thanks.